Since the beginning of this series, the interest rate situation and expectations have changed. Nonetheless, in this final episode, we check in again with Shenling and Natalie for a broader overview of REITs investment strategies.
The thing to be thinking about closer to home is really government policies as it relates to Singapore, policies that promote growth, and as it relates to demand supply in the various real estate sectors. Let me give you an example. In the early to mid-2000s, when we were developing our casino, liberalizing the financial sector, encouraging foreign immigration, all those are policies that were very supportive to growth and hence very supportive to rentals in real estate, both in the residential space as well as commercial real estate space. The second factor, of course, is government demand-supply policies as it relates to different REIT sectors such as office, retail, and industrial. These tend to be a bit more cyclical. When the economy is doing well and rentals are going up, the government tends to increase supply, especially in sectors like office and industrial, because it wants to moderate the pace of rental growth to keep Singapore competitive. And as a result of that, when there's an economic downturn, you usually have a situation where too much supply has been injected, demand falls away suddenly, because we are a small open economy and hence very subject to external shocks. And you suddenly realize that rents come under pressure. So understanding where we are in the demand-supply cycle for the various REITs that you are investing in, that's a very important consideration to take into mind. Now, what are some of the trends that could shape the outlook for REITs within Singapore in the nearer term? Clearly, there's a lot of talk about economic integration with Johor, special economic zone being set up. That cuts both ways for Singapore. On the one hand, more integration obviously should help lift economic growth for Singapore, benefiting REITs, benefiting the economy more generally. But at the same time, more economic integration, the ability to move from Singapore to Johor seamlessly for commuters, that will also mean an outflow of retail spending to places like Johor, which are much cheaper. And that could potentially have a negative effect on certain segments of the retail market. There is obviously the advent of AI driving demand for data centers around the world. It is harder to play this in Singapore because there is very limited space that the government is giving up for new data centers because it is so energy intensive. But again, because of integration with Johor, there are a number of data centers being developed in Johor because land is cheaper, power is more available. This may be an opportunity that some REITs within the region may be able to take advantage of.
Within the REIT sector, we prefer the industrial and retail subsectors, and our top picks for the REIT sector in general are CapitaLand Ascendas Trust as well as Fraser's Logistics Trust. These two REITs are within the industrial subsector and they are benefiting from secular tailwinds. Of course, not all are performing at the same rate, but they are well-run REITs. Several asset classes like your warehouses and your high-tech assets, right? They are doing well. They are still giving positive reversions. So they are more defensible in that sense. So hospitality is our third preferred subsector. While it's still experiencing tourism recovery, especially within the Singapore hospitality space, the room rates have actually escalated far beyond 2019 levels. So it's currently about 130% of 2019 levels. So we do think that at these levels, there's not much upside left and room rates are actually getting pretty expensive. So as such, while we still do expect recovery from other geographical segments for CapitaLand Escort Trust as well as CDR Hospitality Trust, for the Singapore market, it's quite topish.
And this pretty much sums up our series, REITs Reiterated 2024. We've consulted various key stakeholders for their views and opinions, and we're grateful for their insights. I hope we've thrown some light on this topic, and I wish you a successful investment journey ahead.